After looking at margins and cost components, it is time to dive into the break-even point analysis. This point is not only crucial to know for House of Coffee, it also is for its potential investors. The break-even point is essential in a business plan. Anyone interested in a company's financial well-being not only wants to know the return to expect on their investments, but also the point when they will realize this return. When House of Coffee first launched, it took over 2 years for them to turn a profit. They actually lost money in the first year due to startup costs, which is normal in most businesses. Then finally, they covered their expenses and broke even by the second year's end. For this reason, break-even point is an important part of any business plan, especially if House of Coffee wishes to reach to potential investors. The break-even point is essential information to all businesses of every type and size. It informs businesses how much total revenue is needed to simply cover total cost, no more, no less. In graphical form, we can see that the point where total revenues perfectly cover total cost means there is neither a profit nor a loss. This is known as the break-even point, and it is where total revenues and total costs intersect on our graph. The break-even point can be calculated by dollar amount, meaning the sales dollars, or units, that's the production or sales level. As we learned in our previous lessons, fixed costs are costs businesses incur regardless of sales levels. Illustrated in our graph, we can see that total revenues must cover fixed costs and variable costs, or in other words, total costs. Fixed costs do not change with sales levels, but variable costs do. Therefore, as revenues increase, fixed costs stay steady and variable costs increase, but at a slower rate than revenues. This is when we break past, pun intended, the break-even point and begin to see profits. Knowing the break-even point allows managers to make decisions on sales volume and pricing, while it gives executives a reference for long-term budgeting. Indeed, break-even point analysis is applicable at the strategic level as well as the operational level. Hello, certified professional. If you are enjoying this course, get accredited with CPE credits for watching it. Click the link in the show notes or visit cpeflow.com to access the full course ad-free and pass the final assessment quiz to officially earn your NASBA approved CPE credits and certificate of completion. Businesses operating below the break-even point will not be in business for very long because they will suffer losses, not covering expenses, and therefore be forced to close. With COVID-19, a lot of things have changed for House of Coffee. And when the customers wouldn't show up by fear of getting in contact with others, the owner was really scared that the business would not reach above the break-even point and be forced to close its doors. In the next lesson, we will look at what House of Coffee's break-even point is in order to ensure that the prices set by the company permits a profit that allows for them to stay open and thrive financially while continuously serving the best coffee in the country. I'll see you there.